and here we go. I typed in INTC for Intel, and this is the basic outlook. It's saying it's Intel Corporation, currently trading at $50.25, and yeah, this is telling me I press the day, and it says this is a 1 year, 1 day forecast. I can do 3 years every week. Every candlestick is showing me what the week is worth out of the 3 years. If I can go to 1 day, 1 minute, if I was a day trader, so today this is how it traded today. And if I was going to go and trade by the minute, then that's what the Wall Street does and all that. So I'm going to do 1 year, 1 day. And first thing I'm going to look at, if I had nothing else to look at, these are telling you the dividend payouts and the stakeholder meetings and stuff like that. But if nothing else to look at, I look at volume. Now basically what happens is this. A company sells their stock. If the company sells, they constantly sell and buy stocks, but if a company sells their stock and they sell a lot of it, then they kind of don't make money off of that stock. They're selling it for what the retail value is worth. If I have 100 stocks I want to sell and I sold those 100 stocks, then I met my zero. I met my balance. But if I need to sell 100, if I have 100 stocks and I sell 2, and all of a sudden I'm back in the green, that means I sold those 2 stocks for a really good value, which is now making me profit again. So I look at this small red candlestick here and I see that it sold just a baloney ton. So they sold so much, but the red candlestick, it shows you that they didn't really get to green. They had to sell so much, and now they're mitigated their red just to a small red, and finally, because of the momentum, they're able to carry it through. So I'm reading the volume. You don't want to sell all your stock for nothing. You want to sell a little bit of stock and get back in the green. Look at the green. It starts to lower as they're buying in more. The volume is low. They're not stuff like that. So I read it like that. The next is my studies. I have 1, 2, 3, 4, 5, 6 studies. So I'm going to click on my filter section, and I'm going to go ahead and put the first study in, which is the ADX crossover. This is telling me where it's going to land. It's going to land in my chart over here, or the overlay filter study might go over my volume section, or I might add another bar below if I add another study. So I'm going to press apply. And there we go. It takes 1 second. Now I have a study on my thing. This is giving me arrows across the board. What it basically means is I'm going to be on this day, and all of a sudden I'm just watching my stocks, and all of a sudden one day it's going to have a pink arrow. When it has the pink arrow, it's ADX crossover, which means that for me, this is what it means. I see instantly that it's going to be an arrow here, and that I'm going to wait a few days, and then the stock is going to drop. So for me, I say, wow, it's growing, but when is it ever going to go back down? And I go, there's an arrow. Great, I'm going to wait a few days, or I'm going to wait to see when the stock is going to go down. Now I know for sure it's on its way down. And soon enough, it is. It's hit its bottom. I see it's curling back up, and I go, I want to buy here. And I buy. I notice it's slowing down, so I wait and I sell. Good thing I sold up here because it's now the price has dropped. Watching it, great. Now I know that the stock is at a medium because of the arrow. So I'm gonna wait. It's going up, and soon enough, I know that it's gonna be dropping in the next few days, and it does. So the ADX crossover tells you that it's gonna be dropping at some point to some degree. It's not 100% accurate, but I use it. I leave it up there. And I watch how these arrows look across the 3-year span. How much of a consistency is there when it comes to this arrow? And it's pretty consistent, which is why I keep it up. Filter. Number 2, Keltner channels. Keltner channels. Double click, apply. Great. If I want to zoom in, I just drag and drop. And it's going to show me this section here. If I want to get out, I double click. So usually I kind of zoom into this area a little bit. I have a really wide reading when I do it, and I can see better. All right, these Keltner channels. So what this is these are 3 bands, A, B, and C. There's plenty of bands that you can see, but this one is, my opinion, the best because it's a tighter pocket. And basically what happens is you want your stocks to follow this blue trend line. It's just if you have the average of the top and average of the bottom, you want things to average out in the middle. And when things go above the lines or below the lines, what happens is that there's resistance. So everything is telling them to get back down to the averages again. There's resistance each way it goes. So once it goes down, then it touches this line again, and we call that testing it. From then, once the line goes back and tests it, we can analyze the stocks throughout its periods and see exactly how the stock behavior is. So for here, it started here, and it was in an upward motion, and it excelled. They made so much profit. Slowed down, hit this line again, and it's showing pretty steep decline. So it hit this line again hard, and I go, wow, it's definitely going to go down. And it did. And then it goes here, and I see that it touched that line, the red line, and I go, well, the resistance is saying it has to go back up. And surely enough, it does, and it tests again. But it wasn't as strong. This one was so much stronger than this one's kind of lingering, sauntering about. So it's kind of hanging out, and you can read stocks like a book with the Keltner channels. It's just a good thing to look at. I keep it up there. Next is the CAM indicator. Double click, apply. This is saying that it's going to be added to this chart as well. It's another overlay. Wow, look at this. Green, yellow, red, or blue. Sometimes yellow and blue are the same. How easy is this? So, if it's green, it's profiting, you don't want to buy. Why would you buy high? It's yellow, it's inconsistent. Blue, I'm not sure, right? Yellow and blue, I'm not sure. Okay, red. That means the company's losing money. Let me wait for the company to lose the money the most. And then it's blue. Great, now it's in mediation again. So I could have bought any time it's red. If I bought when it's red, and then all of a sudden it turns green, I made my money back. It's literally color-coded for you. And it's the easiest thing in the world. Studies filter. Next is the MACD. This is what everyone uses. Apply. It's going to see lower, so now they just added this to my graphing. I'm going to lower the volume. I don't need the volume anymore. There we go. And then I'm going to increase the MACD. This is very interesting. I'm going to zoom into one of these this portion of the stock here. It's easy. So it's saying here, the same thing as it's color coded. It tells you when it's red, it's going down. Now I see that it's going back up, hitting that line, the middle purple line, and it's green. You don't want to buy. Don't buy in green. It's starting to slow down. I might buy in a couple days when it turns red. Great, turns red. Buy. And sell. Now let's look more closely. Look at the blue line. As the blue line goes up, so does the candlesticks. As the blue line slows down and crosses over this yellow line, that means we're now looking at a drop every time. Now it's dropped, and okay, when are we gonna determine that the stock is in fact making money? And by how much? How steep is this line that we are so confident? Sometimes it's more flat. It's a very flatter line. This is a sharp thing that's crossing this line at a fast dynamic that's saying, hey, we are going to be profiting this section. And they are. Look at this. So you literally read the lines. Read in between the lines. Next is edit the studies to add the ulcer index. And I leave all these studies up. Ulcer index. Ulcer is like I think it's like a cancer term or something. But here we go. They added this thing here. Pretty simple. As the line goes down, the stock market goes up. So this line hits the bottom, and the stock is at its highest point. As the stock goes up, you're losing money. And as the stock goes above, as this chart goes above this median line, you're at less of a risk because it's more probable, and it steeps down. It means that it's making money, which it does. It turns yellow to blue. This is a very over-exaggerated line, but it tells you the risk. For example, the red here, it's telling you there's less risk. You know for a fact that it lost. It's continuing to lose, and it's a very mild line, except for here. It's a sharp line, and your income, you don't really know when it's going to start leveling out. So it's just a basic risk analysis line that you can look into and kind of examine throughout the behavior of the stock over the years and really get an idea of when is it safe to buy? When does it cross this line and hang about? And that's the time I buy. And then I can go and say, how risky is this stock? Is it going to go down and come back up to be less risk? Is it going to go down again and be a little bit more risky? That's how you determine if stocks are risky. Last but not least is, oh my gosh, tricks. I used to know the names for all these, the nomenclature, but not anymore. It added another line below. And I'm going to grab it, swing it up. Easy. Follow the yellow and orange line. This is the yellow line. As it goes up, the stock is going up. And as you can see, there's a big gap. So that means there's more of a chance for this thing to grow. And as it crosses over the gray line, that means you're going to start losing money, which you do, as you can see, from green to yellow. You lose money. There's a gap, so it's pretty confident now. Unlike the other ones where you can't even see the gap. That means it's just limboing about. But here's a gap. It goes down. It touches the averaged middle line, which means it's not losing too much money. It's just going to touch this line. It's going to stay constant pretty much. You're just bumping up and down above this average here. You're actually pretty good. But once it gets down below, you're like, great, now let's start buying at its lowest. Let's start buying at its lowest, which it is over here. The lowest is over here. So that's it. You read the lines, man, and they give you the answers.